All right, I am going to go ahead and get started. Welcome everybody to our innovation versus disruption lunch and learn. Significant venture capital was raised with plans to disrupt the mortgage ecosystem. Companies like Better and Morty were going to remove the commission LO from the process. We're coming to the end of two of the best years ever for origination, and the commission LO is still front and center in the mortgage process. What happened to disruption? I'm joined today by Catherine Amore, Chief Product Officer at Finance of America, Dino Lack, Chief Product Officer at Caliber and Newrez, Sandeep Mathur, VP of the Consumer Lending Practice at Tavant. I have prepared some questions to guide today's discussion, but encourage all of you in the audience to submit your own questions to our distinguished panel. You can ask your question in the chat or the Q&A sections, which are accessible from the bottom of your Zoom screen. All right, let's get started. So this is a question for Catherine. Your company, Finance of America, has a very diversified portfolio of mortgage businesses. How is it for you developing product for forward, reverse, renovation lending, and all the other products at Finance of America?
Well, I have to tell you, as a product person, getting to do more products is always like a bonus. So anything having to do with managing more products, getting to learn about products is always an opportunity for fun. And even better is that, product is really a group sport. It's really about working with the intersection of technology and your customers, right? And so getting to talk to all these different people at our company and getting the opportunity to work with so many visionary leaders is always a real excitement and probably my favorite part about the role.
And then for Dino, you've been on the front lines of Caliber's merger with Newrez. How is it integrating technology for two pretty sizable companies with different cultures?
Yeah, thanks, Diego. And one minor correction, because I don't want to be overlapping too much with Catherine, is I used to be the CPO, now I'm the CIO at Caliber Newrez. But yeah, to your point, it's, as we peel back the onion at our organization, similar to what I think Catherine's said, is we have many systems, many products, as well as three finite and merging up technology organizations. And so whether it's ShellPoint, it's Newrez, or it's Caliber, I think that some of the key challenges we looked at first when we were looking at the merger in the first place was integration of the leadership teams and ensuring that we had participation and really inclusion, of the different teams from the different companies. And, you do your best you can because there's only so many seats there and such. And so I think we did a pretty good job of that. And then it's attacking the mission, vision, values, and ensuring, because culture is hard, and culture takes work, right? And culture doesn't just happen by chance. It does, but it's usually not the right culture unless it takes nurturing and caretaking and such. So, really mission, vision, values from the top, and then starting to cascade that down to the ranks, and then ensuring that you're checking in with the humans on a regular basis to ensure that they feel like they're a part of it. I mean, RTO, or essentially where we're at in our COVID remote journey, has not helped the situation. Togetherness definitely does help. So yeah, I think we're still in the process of it, Diego. It's one of the most challenging things I know I've had to deal with in my career. And I think it's really causing us to grow as an organization. So
checking in with the humans, that sounds like really important, especially when we're distributed and remote for the most part. Catherine, I'd love you to comment on that as well. I think you're a fairly distributed company with businesses, across the country. How do you check in with the humans and make sure that the technology that you're bringing them is making sense for them?
Well, I think it's all about doing it with purpose. I think that no matter what organization you're in, the name of the game as we become more tech-centric is that we're going to be more distributed. And the beauty of tech is that it can bring us all together. And I think when you do something with purpose and drive and say to yourself, I'm going to build an opportunity for everyone to ideate, to co-locate, to be part of this journey together, I think that's really where it comes down to it. And I think Dino was spot on when he talked about the need to build culture and how important that is. And again, that's something that has to be done with purpose. So, as far as our product team and how we handle that, I mean, we are definitely distributed across all 4 time zones. I have people all across the country, and we make time to meet every day. We make time to enjoy each other's company and to spend time together doing things that aren't work related, even if it's in a virtual setting, so that we can check in with our humans and understand how they're doing, right? At the end of the day, we're all doing this for other people, right? And for our customers. So I mean, they really should be at the center of everything that we think about.
So this one's for Sandeep. You've been on the lender side and in technology leadership roles, most recently for Citizens Bank. How do you view innovation versus disruption now that you're in an advisory and consultative role?
So I really kind of see 3 things, right? There's innovation, transformation, and disruption. So innovation is what we're used to seeing, right? So technology innovation. It could be other types of innovation, but we're used to sort of technology innovation. So we're all waiting for supercomputers, but closer to home, the OCR, image recognition, artificial intelligence, natural language processing, all being applied to the data from documents problem, right? There's all kinds of investment happening today across many different organizations about innovating that space. So there's technology innovation happening there. And then there are folks that are taking that and applying it to their business problem. In healthcare and in our world, we're applying that problem to basic stuff, right? Gift letters and divorce decrees and purchase contracts, but also things like on the commercial real estate side, 600-page appraisals, environmental studies. So we have an opportunity to apply that innovation to transform our business. That's what it's ultimately about. It's about transforming your business. I think disruption happens as something that you do almost to yourself, right? If you see the folks around you applying that technology innovation or any type of innovation and transforming the organization, transforming how they do business, and you stay static, you have a chance to get disrupted. And so if Yellow Cab does not transform, Uber will disrupt them, right? If Sears still thought that having a 200,000 square foot facility selling tractors and lingerie in the same facility was the answer, and it wasn't, right? And so I think that's the key. The disruption is happening if organizations are not cognizant of what's happening around them and are not able to then apply the same transformations. So I think that's the key is that. And so you were asking the question about the LOs, and so yeah, there's definitely changes happening to the LO role. But if we're not aware of what's happening and we're not able to apply corresponding mitigation, then there's chances that you'll get disrupted.
Yeah, let's stay on that for a little bit. In my intro, I talked about how the commissioned LO is still front and center in these 2 years that have been absolutely amazing in terms of origination volume and growth. But that doesn't mean that there aren't other functions that potentially are getting disrupted. And Sandeep, in our prep, you talked a little bit about it, but maybe you can share with the audience your thoughts on these other functions that might be up for disruption.
Yeah, sure. Again, this is more current, right? A lot of folks are working on the fulfillment optimization problem. So being able to use data from documents, being able to use data from third parties, applying machine learning and AI to be able to figure out complexity in the loan, right? High risk, high complexity loans, low risk, low complexity loans, right? So how can we apply the appropriate amount of fulfillment energy, fulfillment cost, time to those high complexity, high risk loans? And for the low complexity, low risk loans, take them through a more expedited process, right? The old red, yellow, green. So for these high complexity loans, high risk loans, yeah, I want that senior underwriter. We want them to spend 4 hours looking at that loan. We want them to look at every aspect of that loan. Some loans, we know that the loan, for these yellow loans, we know that the risk is in income. Don't worry about all the rest of it, just focus on income. And then for those green loans, we know these are low risk, low complexity loans, and that you can actually take them through an expedited process. And then we also believe in part of what we're trying to deliver with our touchless lending product is there's a segment of loans because of the access to data, access to information, and applied machine learning and AI. We think we can take to a touchless process. And that's really where I think, and so it doesn't mean that we're going to get rid of underwriters. What it means is we're going to grow. As an organization, we're increasing our capacity. And so as we originate more, we're just going to make sure that we're spending the right amount of energy on the right types of loans.
Catherine, I'd love to have you weigh in there. You know, Sandeep talked about high complexity, high risk versus, you know, low complexity, low risk, and being able to do different things based on that differentiation. Is that how you think about it when you're building product and thinking about what areas of the organization you know, you need to innovate on and what areas you need to disrupt?
I think that is such a fascinating question, right? So part of what we're looking to do is say yes to more customers, right? We're coming off a huge refi boom. We want to be able to say yes to more customers. We want to be able to do that purchase, you know, pivot to purchase, and really be able to think through how do we do that. With that comes increasingly complex customers, right? Everybody who had a simple file that was easy to do has already had a refinance for the most part. As we look to say yes to more people, we look to say yes to more scenarios. And those scenarios are becoming increasingly complex. They're not the single income earner making a W-2 job of lore of yesteryear, right? It's a new complex situation where we have diverse income profiles, diverse borrowers, and we need to figure out how to say yes to them and give them a delightful process. And how do we come into that and make decisions that, to Sandeep's point, allow you to evaluate that risk up front, make smart decisions about how you're going to tackle it, and then ultimately decide where you're going to redirect your FTE hours so that we don't have people spending a ton of time on stare and compare for 10 different income types, right? That stare and compare is using a lot of time. So can we find automation in that? Can we simplify that? Can we find ways to create that easier experience with less touch points? That is absolutely where we are at right now as an industry, is finding the intersection of that.
Yeah, Dina, would love for you to weigh in there. You know, if there are folks concerned about the disruption side and whether that means their job is at risk, how do you think about you know, innovation versus disruption in your organization? You know, do you differentiate between the high risk, high complexity, low risk, low complexity? How do you think about that?
Yeah, it's very similar to how Catherine and Sandeep described it. Really, you know, we think of, you know, whether you call it fracturing or I call it decomposing. You take the linear process that is mortgage today from soup to nuts, you decompose it into its smaller tasks, and then you assign out those tasks to the lowest cost dollar human keystrokes that you can, and you automate as much obviously in front of that as you can. And, you know, I think in the terms of recipes, I think my mother would be proud of that, but you know, I think there's a different recipe. If you can have a recipe that's all machine, like Sandeep said, that's what we're striving for. People often get confused or caught up in we need to effectuate the most loans possible. No, you don't. Focus on the 1%, the ones that can go really fast, seamlessly through, and automate the heck out of that. And once you have it, you can always widen that road out. So that's where we're focused. On the other hand, we're in all business channels. You know, we're big in DTC, big in wholesale, big in correspondent, big in retail, big in JVs. So there's not an area that we're not, you know, focused on today. So we already have kind of the breadth. We're big in purchase loans, et cetera, today, complex purchase loans, simple ones, et cetera. So we have all the intake, we have all the loans coming in from the front. It's more about, and we've been focused on this for roughly the last, I'd say 2 years or more, is really building the scalable mortgage machine that can essentially automate and put everything in its lane, and each lane has a different recipe, right, for that. So, but yeah, totally doubling down on what Catherine and Sandeep were describing is use the machines wherever possible, safe and compliant, and, you know, following risk practices, and then put the humans where you need to, and then gigify, you know, the gig economy. Once you've broken things down to the smaller tasks, you can start to have people work 4-hour days, and they sign up and basically check out their widgets and do those widgets and then leave, right? So there's all kinds of disruption going on there. We're not afraid of it. We're attacking all of it. Nobody's got it figured out. Nobody has it solved, right? No vendor, no one organization. Everybody's still got some pieces right, some pieces wrong, and some fumbling around in the dark.
Yeah, I'd love to get a sense before we go to the next question. Like, I mean, we've been working on the digital mortgage for a long time now, and like Dino says, we're not there yet. Do you have a sense for when we're going to get there, or is this always going to be an iterative problem that we're trying to solve? That we're going to have to keep working at it and keep working at it. I'd love to start with Sandeep on that one.
Yeah, I think there's a big piece of the regulatory world, right, that has to kind of catch up and sort of lead, right? When this whole automated income verification has been around since 2006. But it's only when Fannie did the day one certainty did it sort of really gain momentum. So I think that we have lots of building blocks in place to create that e-closing, and lots of people are working on trying to put all those building blocks in place. But I think that it's probably a regulatory piece. There's probably an investor securitization piece that needs to plug in to be able to really make that. But all the moons are in alignment. Everybody's moving toward that same goal, and I think once those dominoes get there, then we'll be able to do more of that. One thing I just want to add to our earlier discussion about the sort of the triaging process, and then as Dino mentioned, the more task-based decomposition of the process. I think that could absolutely be applied to the loan officer world as well, right? Our goal was not to eliminate loan officers per se. Our goal was always, hey, out of this whatever $9,000 cost to originate a loan, half of it goes towards loan officer comp. Can we optimize that? And so, to Catherine's point, we are getting more complex scenarios that really require those loan officer professionals. But we also have a growing pie of, simpler things, and we have more educated borrowers. They have more tools at their disposal. They're more enabled, and so that segment is also growing. And so the idea is to optimize that cost, not just try to purely eliminate it.
Catherine, what are your thoughts? Digital mortgage, 10 years, 5 years, never, or we're always going to be working at it. What are your thoughts there?
I think it's a constant evolution, right? I mean, you're right. At the beginning of this whole situation, Fannie and Freddie started it and started pushing everyone in this direction. And now I just see it's a constant evolution, right? We have to get all these different pieces in, and as increasingly complex scenarios come into play, it makes these other things look so much easier, which then Sandeep is going to automate for us, right? And we're going to have people on Dino's team, et cetera, who are going to come in behind all of this and keep simplifying it, right? But at the end of the day, I mean, it's going to be an evolution. We're going to continue to find new ways of qualifying borrowers. We're going to find new ways of looking at data. We're going to find new information, and we're going to have to continue to adapt as the world becomes more sophisticated and complex. So I think it's going to be something we're going to continually be working on to refine over the upcoming years.
So Dino, we're clearly in a purchase market in 2022. We've had a couple of years of the refi gravy train that are really coming to an end, kind of a screeching halt in some cases. And so would love your perspective on what it takes from a technology and product development perspective in a purchase market to be successful and to differentiate yourself from the competition.
I think it's access to products, obviously mortgage products, and technology products. Having the breadth, the wider breadth, the more offerings, the more tools you can bring to the customer, the better. I like you, I think the same way, and kind of what Sandeep said as well. I think that the goal here isn't to remove the salesperson from the experience. It's to allow them to actually do more loans. The same thing, which is true in operations, of course, and processors and underwriters and closers and funders and such, is to allow them to just have a bigger flock to manage and get through. with the same number of humans, et cetera, each staff in the spots. And so I think purchase market, it is traditionally different. I think we're seeing a lot of that disrupted in the marketplace. I mean, COVID changed so many things. It made everybody remote from each other for a time, at least. So you saw that disruptive event be a forcing agent for realtors and the remote distributed sales force in retail or in JV land and such. DTC folks, it didn't change so much. We continue to kind of tick away at some of their tasks so that they can widen out, whether it goes to a machine or it goes to a processor and such. But yeah, I think it's more about enablement, technology enablement for the sales force and weaponizing them and making them that much more efficient, which is good for them, good for the customer as well.
We've got an event on reverse mortgages that we're doing for our forward mortgage audience and our real estate audience at HousingWire, and it's been incredible seeing the number of registrations for it. I think a purchase market is a time for product diversity and product creativity as well. And Catherine, I'd love your perspective on this because Finance of America is already there. You're already in reverse. You're already in a number of different lending products. How does technology and innovation play a role in your ability to offer a suite of products to the market?
Well, I think one of the things to keep in mind about having diversity in product is that often means you have diversity in the tech stack that supports it, and you have a sales force that would like to become increasingly efficient in being able to offer all that different product. So I think it's an amazing opportunity for us to continue to look for solutions in the industry that allow us to handle increasingly complex product in a simple way for our sales force, right? Because at the end of the day, these loans require people. You can't just lob a reverse mortgage at someone and expect them to understand it. You can't just lob a small balance commercial loan at an investor and expect them to be able to cut through all the noise and know which product or program is really going to suit their needs. You need that consultation in that process. So continuing to look for innovative solutions that are going to be able to support a diverse range of product offerings in a simple, elegant, streamlined way is really what's going to be at the forefront of what's going to make us successful in the upcoming years as an industry.
Yeah, Dina, I love your thoughts there as well. You've got a pretty interesting product and business line suite at Caliber New Res as well. How do you address that from a technology and product perspective? It must be fairly complicated.
Nah, it's all easy. At least that's what everybody upstairs always tells me. I couldn't agree more with what Catherine said. Technology needs to evolve from being transactional in the organization to being consultative, assistive to, because as the product set is becoming wider, more diverse, and more complex, that requires more in the moment training. The system has to advise, has to consult, which is exactly what Catherine was saying. So I couldn't agree more on that, which means you have to evolve your tech stacks to be able to allow for that. So we're in the process of doing that as well. And it sounds like Catherine is too.
Sandeep, so, in 2022's purchase market, do you think the winners are people-led, a hybrid of people and technology, or technology-led, or does it depend?
I think definitely a hybrid, right? We have this phrase we use, hop on, hop off, where you have the customer journey through the origination process, but what you have is very diverse customers, very diverse borrowers, some very experienced who want to do more things self-service, some who really want the comfort of talking to a loan officer, high net worth people who have other people handling stuff for them, the digital generation that wants to do things at 2 o'clock in the morning. So our entire process has to be able to allow different people to interact with us differently. And some tasks, some people want to do self-service, some tasks they want to interact with people to do. And so we want to be able to allow the customer, the borrower, to be able to interact with us the way that they want to interact with us. And that is ultimately going to, we believe, is what's driving more closure, more customer satisfaction. It's supporting all these different sort of personas, if you will, through this process, and all the way. It's not just about just the point of sale. It's all the point of sale. It's the fulfillment process. It's the closing process, all the way. And you were talking about the purchase money market. I mean, it's also looking at the realtor side of it, right? How do we, engage with our customers from the point of thought, right? When they're starting to think about purchasing a home. So in that purchase money market, they're starting to think they'll spend months looking at Zillow and other places to look at properties, and they'll do a lot of things self-service, and then they'll talk to a realtor, or then they'll directly talk to lenders. So we want to be able to support them all the way through that process in the way that they want to interact with us. And ultimately, I think that's what's going to be the winning kind of strategy.
Yeah, the realtor partnership is absolutely key, and would love to hear from Catherine and Dino on, is there a way to productize that connection for your LOs so they can develop better partnerships, give better information flow to their realtor partners. How do you think about that realtor partnership, which is so key in a purchase market? Maybe start with Catherine.
So, Finance of America is definitely a relationship-based company. And I can tell you that being able to think through timely communication with your realtor partners and different downstream partners is so important. When we think about, all the different opportunities to get in front of them and help explain product, really the name of the game is being able to be simple and to have a clear and concise communication that doesn't overcomplicate things. There's only so much information people can take in. And when you have, let's say 38 different products out there, what people can really absorb is 8. So how do we continue to say yes to more customers, right? Offer more tools and resources, and do so in a way that creates a simple, consistent experience for all referral partners and all businesses. And coming up with technology products and services that are going to accommodate that is definitely something I think we're all working on, making sure we have that right mix.
Dino, how about you? The productizing of the realtor partnership and that information flow.
Yeah, that's on our journey as well. But I want to also go back to, I think, something both Catherine and Sandeep referred to as, we call it different strokes for different folks. And yes, I know that comes from the 80s, but the concept there is, it's whether you call it the journey maps or the primary flows and such. I think like everyone that's, at least hopefully everybody is doing this, is to focus on the customer. We used to make the customer not so long ago, and some folks are still doing this, come to us and deal with us on our terms because it's all about the lender, right? We're the one that matters. We're the one that has the money that they want to get access to buy that. But it's, folks have really started to, realize that the customer should be the focus. Make it easy for them. They have choices. They're not beholden to us, the big banks, the big lenders, the big whatevers. Their brand loyalty is so much lower today than it ever was or has been and such. So I think, knowing that everybody has that swim lane focus of just being diligent and driving everything to be about customer experience and about the customer wait time and how you message the customer, how you interact, how you engage. Email is so last year. Everybody now is texting, right? So that's how you're going to hit people. Get them in their pocket, not back at home on their computer that they look at once a week on weekends, et cetera. So customer just vigilance and doggedness engagement is one. At the same time, though, we talked about sales weaponizing and such, and whether it's the salesperson directly or it's their ecosystem of how they're interacting with their partners, such as realtors. So then I come all the way back to your point, Diego, on that. So and then, inward, we'll talk about in a bit, is operations. People think of operations, we separate them. Maybe the processors talk to the customers, unless it's wholesale, then they're talking to the brokers. But we think in the terms of taking away the wall and making it a pane of glass, right? So that ops is looking through and able to see not directly, because it gets a little weird, but customers on the other side, and customers can look through. It's about customers should be able to engage with their conditions. Back to Sandeep's point, whether it's 2 a.m. in the morning in their underwear, or they're fully clothed during the day, whatever. But you got to be able to let them 24/7 access things and interact and participate in the process. But you also got to engage them, sort of put the customer to work, right? So I know I can get a bit long-winded, so back to you, Diego.
No, I love that. I want to keep going on kind of customer obsession, and how you can enable that with technology. And so I'll go back to Sandeep, but I also want to hear from Catherine on that as well. Sandeep, how do you think about that making sure that you're obsessed with the customer?
Yeah.
Because if you're not, it's very easy for them to be out.
Yeah, I think, for me, I think we talked a little bit about, customer enablement, right? How do we actually give them, the borrowers, more ability to do more complex things, right? And to me, the analogy is kind of, the stock market, right? Where were we in 1998 when E-Trade first came out, right? Before that, I used to call my stockbroker, say, buy or sell, whatever. That's how it was. And when we introduced online trading, we went from a stock market at 9,000 to a stock market of 30,000, right? The pie grew. And that's what we think. And so how did that happen? It happened because, stockbrokers had the tools, they had the knowledge, and they had the data. And they controlled all of that stuff. But when we democratized that and allowed regular consumers to be able to get that information, learn about how to do options trading, more value was created in the market. And same thing for our industry. The more we empower the borrowers, the more we enable them with better tools, more knowledge, and more data, right? Imagine if they could figure out on their own, okay, what do they think what will happen to rates? There's probably a larger growing segment who are willing to pull the trigger and rate lock the loan because they feel more comfortable. Right now, even an experienced borrower probably wants to talk to a loan officer because they don't really have the data or knowledge to be able to make that decision confidently. But that's, to me, what it's about. It's about that enablement of data, tools, and knowledge. And the more, I think, energy we put into helping our borrowers get there, I think our industry will grow. And that's where I think that's how the pie, I think, grows.
Yeah, I mean, Catherine, you referred to it earlier. Kind of how do we help more people get into a home? So customer enablement, customer empowerment, customer obsession. How do you think about that at Finance of America in your product role?
Well, we're very passionate about the customer. That is something that definitely matters. And consultative sales, right? Really sitting down and understanding what a customer needs. And to Sandeep's point, and I think he said that perfectly, over time, we're going to grow and figure out ways to create more automation in that, right? And how we get there and how we do that and how we, as Dina was saying, get the tech stack to a place where it is able to then pull that type of information in detail, and is ultimately how we're going to evolve, as Sandeep said, get a larger slice of the pie, right? And at the same time, in the middle of all that, there are still 48 kinds of jam and products, right? And at the end of the day, you're still going to have, I think, some piece of that consultation at the human level necessary. However, do we need to have all of it that way? No. And should there be simple ways for borrowers to upload documents and make it simple? I want to do it from my phone, right? I don't want to have to go stop in somewhere and get all this paperwork and then have to wait a bunch of, for a bunch of time for someone to review it. A lot of that should be able to be automated and be part of that, nice, seamless, easy process. So figuring out how we get there as an industry and continue to grow and evolve is going to be the secret sauce.
There's a point in our industry, right, where I was going to say there was a point in our industry, right, where I would download my bank statements and print them off and then bring them into a branch. I'm like, and that just, so obviously we've obviously overcome that now, but the past.
So Sandeep, you're aware that 3/4 of folks still do that.
Oh.
Don't tell me that.
I was just going to say
that.
I was just going to say that, we at HousingWire, a lot of the team has either bought or sold a home, some folks twice during the pandemic. And even during the pandemic, I think almost everybody, if not everybody, had a manual closing process, and with manual paper-filled closing process on the back hood of their car or in some other strange location. And so, it's still very real. It's still a very real problem. I'd love to, dig into automation a little bit because, sometimes automation can be alienating for the customer, and we want to be, we want to keep the customer happy. How do you automate without alienating your customer? Maybe we'll start with you, Sandeep.
Yeah, I mean, to me, that's kind of what we were saying earlier about that whole hop on, hop off, right? You have to be able to allow the customer to engage with you the way that they're comfortable with. And whether it's on their mobile device or whether it's on the web or whether it's through phone or whatever, you want to be able to allow that customer to do that. And so that's, I think, the key is that, it comes back to the folks that are focused on borrower enablement, educating the borrower, giving them better tools, giving them better data. That's the place where they're going to gravitate to. That's happening today, right? So we talked about the realtor, the purchase money market, and when I'm looking for a property, right? I don't go with the realtor driving around anymore. I always start, online. So that's the nature of where we're headed, and so the technology has to be able to support that kind of hop on, hop off approach.
What are your thoughts there, Dino?
Yeah, I think it's about communication. There's a lot of siloism that goes on. I recently had to go count the number of systems or major applications that we spliced together to do this simple thing called origination of mortgages and servicing of such. And we have a mix of proprietary and off-the-shelf packages. And the number came in at, roughly over 200 components and basically applications and such. So there's a lot to keep track of, and there's a lot of walls to break down and keep things open to each other. So if the systems are having trouble exposing themselves to each other, then you can imagine how the humans feel up top, right? So when you think about it in those terms, it is about, I think most folks, sure, it's scary to say, oh my gosh, you're going to pull my bank statement. If I read the fine print, you get to pull it for the next 60 plus days. And I don't, nobody reads that fine print, but they should. But with whether it's, whichever VOA provider you're using, and then, but it's all heading in that direction. Like there's no stopping. Since 2010, when the GSEs kind of opened the doors to the fintech generation, because it really, to your point, it started with them. I think Sandeep mentioned that earlier. Once they went that way with VOA and such, well, then you start to unleash things. It started with credit, actually, obviously, way back in the day, right? But we're going to keep having that, move to the cloud, the breaking down of borders, the socialization of financial information with the right security protocols as well, of course. But with that, letting the humans be in charge of who has access to their data or what is going on with that data and how the flowage is. Obviously, OCR is going to continue, with AI-based OCR, it's going to continue to be a thing, more of a thing. We got to keep minimizing the amount of stare and compare for our humans, but it's still an essential, portion of that, especially with the final note coming in on the tail end and such. But we'll move more to eNote, and then I don't think I got to answer Diego the question earlier about how I think about when we'll have more, I guess, completed automation in the process. I think the next 2 years are going to be very interesting. They're going to be very challenging from business perspective, depending on rates going up and down and such. But from a technology stack, and the opportunity for that customer to be more exposed and more in command of their own decision making on their own loans, but also more empowering for the sales force and more automated for operations. You will see a portion of loans go through that only get a few hours of touches, from operations. And, I think the next thing I'd like to talk about at some point, Diego, is obviously data, putting data to work, right? Putting it back into the process and we produce so much data in this industry, but it just sits down in the bowels of the DBs, the databases and such. We don't do much with it because we're blinded by it. So, I think the democratization of that data and then fueling it back into the machines to have smarter, tighter workflows, that's the exciting part for me in the next 2 years.
That it's interesting that you say that. That was something that Sandeep brought up in our prep, and really wanted to dive into the topic of data. So let's do it. Let's talk about the power in data, and what we can do with it at scale in your lending organization. So maybe Dina, we'll stick with you for a moment, and you can talk through how you're thinking about that at Caliber New Res, and then we'll go to Sandeep and Catherine on the topic of data.
Yeah, thank you. We're very much focused on sort of first things first, which is data stewardship, data governance, and ensuring that you can trust the accuracy of your data that's coming through to the analytics tiers and such. So we're heavy down that path and focused on customer essentially 360 and loan 360 and employee human 360. But as we merge down those paths, it also gives you the opportunity with the real-time nature of things. We're focused on modeling today with our AIs and such. That modeling then can yield you remove loan inertia, but historically we've had to show up with humans and look and find the inertia and then figure out how to eradicate it. But what we're trying to do and really working on today is training the machines to look for inertia within the process so that it expedites workflow, so that loans don't sit in queues. You start to get more effervescent with pushing activities or tasks to individuals as the loan needs them to be done, et cetera, versus putting things into queues that wait. So that's where we're focused.
Sandeep, I'd love for you to dive in on this one. This was a topic that you were pretty passionate about in our prep call.
No, I think it's so Tamat has this other side of the business where we're working with customers like Disney and CNBC and these guys who are way ahead of our lending industry in terms of squeezing value out of that data. And I think Dina should feel comfortable that from what we see, everybody's kind of at that same point, right? And within lending, right? We all created data warehouses. We all did great kinds of reporting and analytics, all kinds of good stuff. And everybody's starting to realize that that there's gold in the data and that we need to start creating data lakes and more comprehensive repositories, not just for reporting and analytics, but more importantly for the future, the modeling, the predictive nature of modeling. And that's kind of where everybody's at. Everybody's thinking, okay, how do I go from my data warehouse into a data lake and something more comprehensive, and get everything, any metric that I touch into that data lake? I don't even know what I'm going to do with that yet, but I need to start getting that. That's kind of where everybody's at, right? And so back to the disruption sort of idea, if you guys as an organization are not looking at how do I keep my data stewardship, how do I protect it, how do I build it, then you're a little bit behind the curve, because there are definitely some folks out there who are further ahead, right? They're already, they started to do this a few years ago and are further ahead in modeling and using that data for more intelligence. So, obviously risk modeling, everybody's been doing, prepayment risks, those kind of things, everybody's been doing, and that kind of modeling has been going on, but there's so much more possibilities with that, right? Imagine if I could figure out based upon my data and other people's data, before you make the phone call, before I pick up the phone, Imagine I know that if I sent this loan to Joe versus Sue, Joe's going to have a better ability to close this loan. Imagine that before you actually make that phone call, because there's so much data out there. There's so much data about you out there. We're working with the credit repositories on the ability to pre-fill an application, right? Which is a simple use of this data. 4 pieces of data, pre-fill the application. I have 85% of the application completed. That is just an example of the kind of data that's out there. But imagine being able to do, as Dina was saying, more refined operations, like across the board, whether it's origination, fulfillment. Imagine doing capital markets, better hedging, be able to predict fallout in my pipeline more precisely. I can hedge better, manage my warehouse lines better. I mean, so there's real money behind that, right? There's real savings to an organization and to some of those things. So there's gold in that data, and everybody's kind of working on, okay, how do I build this forever repository so that I can do something more intelligent long-term with it.
Yeah, Catherine, I'd love to get your perspective on data and maybe dive into how you're empowering your LOs, with data, helping them be more efficient, go after the right customers. So you're matching like your best LOs with the prospects that need them in order to get a deal done.
Oh man, data. I love the conversation around data and what we're going to do with it. And I think that both Sandeep and Dino brought up really good points about like using data for fulfillment, using data for improving the way that we're looking at customers. We also use data in terms of how we're going to also get an LO to review a file and determine whether that's going to be a lead that they should call and whether it's like a red, yellow, green lead, let's say. And make decisions on that today. So, I mean, I think that's a key piece of any type of system that we're putting in place, and making sure that you're thinking through how you can use that data in order to recapture your business and keep it within your ecosystem. Even beyond that, like my interest in data extends to how we design products and services for those customers, and thinking through like, how do we take that data and use increasingly, more information. We live in the information era, right? And there's so much data that's out there that's not even in our ecosystem about customers. At what point do we look and say, how can we use that data in order to really reconfigure the entire way that we qualify borrowers? I think there's so much opportunity here to look at that and to change the way, like today we qualify everyone based on the same subset of information that we care about. Is that really the best subset of data? Is there other data that may be more predictive, as Sandeep was talking about working with credit agencies, et cetera, that may be more predictive of whether or not that could be an interesting loan product for them? So figuring out how to use that data in those ways and looking to create products and services around that, I think is key, in addition to improving fulfillment and everything else that we've talked about.
I love this passion that I'm seeing around data. So Sandeep, a question just came in. Can you envision modeling your most profitable customers and doing predictive modeling for marketing purposes? And how far are we away from doing that in mortgage lending? Yeah,
so I mean, I think on the banking side, they're kind of already doing some of that, right? They look at share of wallet, they look at, what else can I do to further engage with that customer across a diverse set of products, right? Checking account, savings account, loans, that sort of thing. But absolutely, I think that, I think the idea here is that we don't have to make the same amount of money on every single transaction. If we can truly triage our processes, manage our costs, then we can absolutely do it exactly as you're asking, right? So that we know that we're going to spend X amount of energy cost on this borrower, on this transaction, then is it worth it for me? And some lenders will maybe say no, but the idea is to spend the right amount of energy on this loan. Every loan is worth doing, right? You're enabling the borrower, right? Main Street to Wall Street to Main Street, but absolutely, and I think that is absolutely real, and it's happening in various degrees today.
Another question that came in on data, what are some of the data points that you think are commonly going unused or are underutilized?
Yeah, It's a good question. Some of the ones, there's some easy low-hanging fruit where a lot of folks who think when you're doing ADR and OCR, so doc recognition and classification and extraction, that you must wait till it gets all the way through the machine or cyborg human machine process, and that may take minutes or hours. When the customer is stopping by their mobile app or stopping by the website, for roughly 17 minutes, it seems at a pop, are you going to catch them in time? A lot of times they'll submit their docs, goes all the way into ops, but they're already gone by the time they get the message back. So this is low hanging fruit, but essentially the moment you can get a machine response on at least the classification type, telling them that they uploaded an unknown kid's crayon drawing versus their W-2 they were supposed to, that's in the moment gratification for the customer. Whoops, I uploaded the wrong doc. And that happens more than folks think, uploading the wrong doc to the wrong, sort of condition or task. So I think that's one data point / process we focus on. Internally, it's also if you're closely mapping doc types received to the conditions that the underwriter needs to review or processor needs to, if you have a tight coupling or mapping, you can essentially effectuate, don't put a task in front of a internal user that they can't fully complete, because you're just creating another cycle in the process, right? So, and there's art here mixed with the science. It's not all just, focus on the machines and build algorithms. Some of this has some subjectivity to it, of course, but so I think those are a few of the data points. I could talk all day on data points we're uncovering, because it depends on whether you're in the sales tranche or you're in the customer tranche or the ops tranche or post-closing, or like Sandeep was saying, capital markets looks at loans entirely differently than operations does. So there's so much data. It's a wonderful place. It's just it'll drown you if you let it. So you got to make sure that you focus, you test and learn a lot, right? Is where we're at.
For your wholesale businesses, and this is for Catherine and Dino, and this is a question that came in from the audience. What data integrations do you see on the horizon that can better the relationship between mortgage brokers and wholesale lenders?
Oh man, I think Dino started to hit the nail on the head when we think about like ways that we're adjusting the right information when brokers are uploading data to lenders, having a way to help them understand real time what they're missing, conditions, the status of that, getting those pieces moving in the right direction, getting that real time feedback so that we aren't repeatedly going through cycles. To me, I think that's going to be key in order to really improve that broker relationship. I know it's a growing segment and it's so important, right? And how can we improve that customer focus there? Because the broker is also the customer in that transaction. And how do you help them understand and see, right, what's really going on with those pieces of information and what's the status of that? I think that's, to me, probably one of the lowest pieces of hanging fruit there that could be so helpful for all parties involved and really help all of us have a better relationship in that area.
So we're getting close to the end of our hour. I want to make sure with particularly with these two lenders on this panel to ask about technology integrations and M&A. So many lenders are formed through the acquisition and integration of multiple smaller lenders and to make a bigger lender. So Dino, maybe starting with you, it's very fresh for you, right? I mean, you're still going through the integration with NewRez right now. How do you think about that technology integration, in the long term, for your organization and making sure that everyone's on the same page?
Yeah, I really like NRZ, our parents' approach to it. They're very open to technology investment. We're always looking at organizations to potentially invest in or acquire and such. So, but to your point, with Caliber and NewRez coming together, all in top 5 lender, in the country, and in all business channels and such. And yet we're still looking at other options. We don't want to be the biggest though. We just want to be the best profitably run organization. So we're going to be very purposeful in where we go with our capital and such. I think organizationally though, to your point, we end up with 2 or 3 of everything systems wise. So we always have to look at it that way too. And the integration and merger transition costs of that, there's baggage there always. And so we're building a finer lens, I think, as we think about acquiring organizations and how do tech stacks or people stacks line up with each other. And I think that's been going to continue to be a big part of our future as well.
Catherine, there's been I think it's dozens of acquisitions that have led to the formation of Finance of America. Do you still see the vestiges of multiple systems, or do things get integrated pretty quickly when you're acquiring a company?
We have M&A down to a pretty fine science in terms of being able to bring on companies, and we've gotten to a point where I think that we do a really good job of evaluating the different tech stacks, the people, all of the different pieces, and making those decisions quickly upfront as we're doing that. I think that's one of the benefits of having done so many of them at this point, that I think that the company really does a good job of working through that piece and making sure that we have a plan. One of the nice parts about also getting to look at other tech stacks and other pieces is you do get a lot of different conversations and get to have a different view into a lot of those things that aren't always through the lens of being sold, right? Because oftentimes we're talking to salespeople for those tech stack and you're getting a really rosy view of it. But through the diligence process of being able to go in there and buy a company, you're really getting to get a look under the hood and see how normal humans are using that system and what it looks like in play, and get a chance to talk to people about it. So I've actually thought that there are a lot of benefits to the M&A concept of getting to view things like that. And we've also picked up some real top talent in that process as well. So I view the M&A piece as being something that's been very beneficial to our company. And we've ended up having a lot of really great people join the organization and made some great technology choices as a result of that as well. So.
Well, Sandeep, we'll leave you with the final word. From your perch at Tavon and advising, multiple lenders, how do you view that M&A issue and the integration of technology? What do you think the keys are for lenders that are pursuing a roll-up strategy?
So I think that when you bring 2 organizations together, there's a reason that you did that, and the sum of the parts should be greater than the whole. And what the key is, that alignment, right? So whether it's 2 lenders coming together, or in RZ's case, they have other subsidiaries. So how do we make the best of both worlds? How do we get that synergy across those organizations? That, I think, is the key, is that once we have an alignment of how is A going to help B and how is B going to help C, that I think is the key. And when we're all focused on saying sort of that understanding of that business value, right? Ultimately, we're all trying to drive towards that business value. That is what the key is. And then we can define a technology strategy that enables that business strategy. And that technology strategy is what then gets enabled to, but ultimately we're focused on the combined value of the organizations, how they're helping each other, the best of both worlds, and then drive the technology, to achieve that. And I think that's what we're all trying to do, right?
Well, Sandeep, Catherine, Dino, really appreciate your time and your insights. Thanks so much for joining us today.
Thank you.
Take care, everybody.